Hey, thanks for joining me. I wanted to do a kind of a quick impromptu MicroStrategy, at least from where I'm coming from. I haven't seen any of these charts that I can think of per se, at least in terms of this type of angle for MicroStrategy. I just wanted to share, what I'm looking at in terms of playing MicroStrategy. For those that are kicking yourselves, you keep hearing about it and you're not in it, boy, if this, in my opinion, this is the ideal time to get in. This is what I wanted to share with you. So let's start here. This is the entire history of MicroStrategy, and we're on the weekly time frame. And I did that again just so we can kind of cut out some of the noise, but I wanted you to see where we're at in this cycle. But one thing I wanted to call out is here is the all-time high back in the, looks like year 2000. So call it 24, 25 years ago. And if you can see this dotted line, it's faint, but that's current price action. And then I'm going to zoom in here in a second, but we're currently seeing a pullback after the breakout, and the pullback is going right back to the neckline from the all-time high. And I'll zoom in here so you can see this. If you could, when we go back to, current day, just remember this, literally, if you can see that, this dotted line again, which is price, it's literally resting right on the all-time high. This is what I mean from a very low risk to an extremely high reward. Okay, so let's tighten it back up. Yeah, so let me share with you a couple of things I'm seeing, okay? So one, we've got, it seems like this is the last 2 years are notorious for these nice multi-year bases, and these not just bases, but rounded bases. So here's the base I'm talking about. And then we've got this high right here back in February of 21. So we've got this multi-year neckline right here. And you can see when price came up the right side, it broke out right there and went range bound in here. And it tested this classic SR flip, support resistance flip. So right now here, this is acting as overhead resistance per se. And then price just shot right up through the neckline and then went range bound. And I thought this was interesting. And when it went range bound, it was in yeah, a rectangle, and it was in that rectangle or range bound for about 217 days or so. So it was in there long enough to have this explosive move, to the upside. And so here we are. And just remember when I was talking about a few minutes ago that when you see price right here, it is literally resting on that neckline. And from a risk reward standpoint, this is where you buy, is right here. And if it was me, I would put a stop loss. It's, I'd go super tight because, this is a high beta stock. It's extremely volatile. So, I don't know how people would feel about this, but if you set a stop loss, say at like 2 or 3%, I wouldn't go any deeper because I would not compete against that 24-year-old or 25-year-old neckline, but I'd put her just below that. And if you get stomped out, you get stomped out. So let's, in no particular order, I'm going to overlay these are the weekly moving averages. Yeah, so far this is looking really strong. I like that. So first of all, here's the SMA 200, the 100, somewhat faint, but this is the SMA 50, Stan Weinstein. Every time I hear about the SMA 50, I think of Stan. Here's the 55, and then we've got the 20, and then the EMA 9. Price is just below the EMA 9, but I like how the uniformity of all these moving averages, and not only that, they're not spread too far apart. Looks like they're just getting started. Again, these are the weeklies. So I'm going to take the time frame down to the daily. So these are still the same moving averages, but now I'm going to overlay the dailies. Yeah, interesting. So here's the SMA 200, the 100. It's a little crowded in here. Let's do this. It's a little crowded in here, but there's a couple of things I like is you can see this green, which is the 50 SMA, came up through the EMA 55. So for a bullish crossover. So we've got price resting on the EMA 55 and the SMA 50, which is nice. But price is squeezed or sandwiched in below the EMA 9 and then the EMA 20. But so far, I like this. So check, check. Something else I'm seeing. I'm going to take this down to the 4-hour. And then if you're a pattern person, which I really do enjoy patterns, let me get rid of these guys. And I'm seeing there's a couple ways we could draw this. Let me get rid of this. You could draw it like that, or we could, let's see if we could take it back to the daily. Yeah, again, I'm just kind of illustrate my point. There we go. I like that. Yeah, I like that. This is typically a continuation pattern. These pennants, bull pennants. Draw this out so it looks more like a pennant. But again, these are typically continuation patterns. So I like that. And this is also what I thought was interesting. If we put on the 50 SMA, again, I learned this from Stan Weinstein. A lot of the pro traders and legendary traders all have the 50 SMA in their bag of tricks, but this is interesting that we've got price that came all the way down and it reacted nicely right there. It's coming back for a retest. So, as of now, not only are we resting on the all-time high neckline, we're also resting on the 50 SMA. Like Stan always says, when price action falls below that 50, it's a board like Mayday, Mayday. And we've got like a double confluence here. So this is why I was alluding to having an extremely tight stop loss. Just for kicks, let me just do this real quick. Let me draw that neckline in there, that all-time high neckline. So let's get this. There we go. Yeah. Boy, this is such a beautiful setup right here. So hopefully that makes a little bit of sense. And I'm going to kind of pivot now. Okay, so I just made a pivot, a transition into another trading or technical analysis platform that I really like. This is going to be a different view per se, but we're still on MicroStrategy, and I'm on that 4-day time frame just so we can kind of squeeze everything in here. And again, here is the all-time high, right? And here is the neckline. I'm not too sure why I said 17 years, so you may want to double check my math. But regardless, it's a long, long time. And the longer, in my opinion, the better, then the more explosive. But the one thing I really wanted to call out is the wave counts. So if you see right here from an Elliot Wave standpoint, here is wave 1. This is the cycle wave 1. And down here, get my drawing tool. And then down here is wave 2. And for those of you that are familiar with Elliott wave counts, as we start this journey for the third wave, the third waves are historically the most explosive, and not all the time, but typically the third wave is twice as long as the first wave. So the first wave started down here back in what looks to be early 2002, and then finished right around 2020. And then we've got this second wave, and the second and the fourth waves are always corrective waves. The second wave we've got bottoming out right around 2023. And now we're on the move for the third wave, which I'll share with you some of those targets here in a second. The other thing that I find interesting is that I'm not seeing in other MicroStrategy charts is this channel right here. And the reason why I want to call this out is because anytime you get a breakout, whether it's a horizontal breakout like we're seeing now, or a breakout from like an historic long-term fib channel like this, it's explosive. And so we've got like two explosive breakouts occurring at the same time. And again, from a technical standpoint, if we have one, I'm very optimistic, but now we have two. So we're seeing confluence here. So now I'm going to zoom in right up in here. This is what I forgot to mention when we were looking on TradingView. It's right there. Is we had a breakout, and this is totally normal. So here is our breakout right there. And remember, this is a breakout from the neckline that dates back to 2000 or 2001. And then we topped out, right up here. But now we're coming back and we are on this pullback or this retest. And this is extremely normal and to be expected. But this is where I'm talking about the extremely low risk and the high reward. And not only that, but this is typically where the smart money, the big money, really starts to back the truck up. Sure, they'll probably nibble in here, but when they see these pullbacks and these retests, and if price action respects this and starts to move to the upside, but this is where they really start to do their progressive pyramid buying right here. So I'm extremely optimistic when I see this pullback. So now we're almost done here. Let me just share with you some of these targets I'm seeing. By the way, I'm using from a target standpoint. Let's see if we can squeeze this in here. The fib sequence. There's a variety of ways we can do this, but I'm just going to, just for conversation's sake, I'm going to lock in these fibs, and I'm going to lock in the target. But as of right now, so right now price is at $330, and these, the orange, are the fibs extensions. To be clear on that, these are the extensions that are anchored from the bottom of this second wave. But if you use these as some of the targets, or right here, this orange shaded area, again, this is just the beginning. And this may seem crazy, but again, we're at $330 and we are going to eventually find, and I think this is going to happen in 2025, but between $5,200 to $6,200. And if you look at this distance, from here to here, it may seem like an astronomical, it may seem like it's just doesn't make any sense. But one thing I'm optimistic about is, when you look at this neckline just down in here, these are somewhat measured moves from the neckline, down to the lower part of these bases. And if you just kind of eye it, this doesn't seem out of the ordinary. And again, this is, just the beginning. Let me go back to TradingView and share with you one more thought to kind of validate my point to that 5,600 level. Yeah, to help validate that, is if we were to overlay some of the fib extensions, we could just do some measured moves. So where current prices at today going up to the 1.618, this to me seems like an easy layup. That's a 187% move up to $920. But this is the one that's really attractive, is the 2. It's not an actual fib, it's a whole number. But that takes price up to almost $3,500, which is about a 962% move. It may seem, crazy, but I don't see this actually taking too long. Then because I consider MicroStrategy a Bitcoin proxy, or like a leveraged Bitcoin ETF per se. Since cryptos, I'll call this a crypto, loves fibs, we've got this 2.618 up there. This is where I probably sound like a crazy man, but if I were to measure that move, that's about a 9,000% gain from current price action to the 2.618 level. So that's a 9x. So that's, again, 9,000% move from where we are at today. I'm really optimistic on this. So with all that being said, this was impromptu, and I hope that was helpful. And if anybody has, if you have any questions or whatever, just, let me know. And thanks so much for watching. Cheers.